Good morning, good morning, good morning. Welcome to today's Morning Blast. It's Monday already. It's Monday, the 10th of March. Before Michael and myself kick off, I better get the legals out of the way. As usual, nothing discussed in this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, as PIQ or PIQ Suite, or indeed that of the hosts, which is, as you know by now, Mr. Michael Brown and myself, Mr. Ryan Paisley. Mr. Michael Brown, how are you?
Good morning. I'm on top of the fucking world. We've had no air conditioning in the office, no Wi-Fi, and a bunch of protesters outside. So what more could you want on a Monday morning?
Yes, he's happy. What are the protesters for?
Free Palestine, apparently, because shouting that in the middle of the city of London is going to make things all
Oh
fine
yeah.
and dandy in the world once again.
Talk about know your market.
Yeah, it's yeah. Also, by the way, we actually don't have internet, so if I do cut out, I'm doing this on 5G this morning, so I could disappear because there's no Wi-Fi and there's no aircon, so I could faint. So yeah, it's all going swimmingly this morning, mate.
So Pepperstone currently being run on cups and string.
Yeah, basically, if you can't get an order filled, now you know why.
Yeah, exactly right.
Give Ben a call; he'll sort it out.
Yeah,
Niche joke.
absolutely. Right, crack on while we still have you.
Oh, right. Good morning, everybody. Happy Monday to everyone who's not on Gracechurch Street this morning. Let's kick things off with a look back at Friday, of course. All eyes were on the February US labour market report. It was a solid enough report, in all honesty, although it's not going to be one that's solid enough to make everyone stop worrying about the state of the US economy. Headline non-farm payrolls rose by 151,000 in the month of February, broadly in line with the 160,000 consensus and well within the comically large forecast range of between 30,000 and 300,000 jobs having been added. A very modest net revision to the prior 2 months worth of data, just minus 2,000, which saw the 3-month moving average of job gains dip to 200,000. It is worth noting that the break-even pace of payrolls gains, which is the rate at which non-farm payrolls need to grow in order to keep up with the increasing size of the labour force, that has now dropped to probably about 100,000 as a result of the reduced immigration that is coming into the United States. So clearly that 3-month average of job gains is well above that break-even pace. In terms of other parts of the labour market report, sticking with the establishment survey, average hourly earnings, they rose by 0.3% on the month in February, down from the 0.5% pace that we saw in Jan. And in turn, that dragged the annual pace of earnings growth lower to 4%, down from a prior 4.1%, and really reinforcing the Fed's long-standing view that the labour market is not a source of considerable upside inflation risks. Meanwhile, turning to the household survey, there was a little bit of weakness, although it is worth taking these figures with a bit of a pinch of salt because the household survey this cycle has been very, very volatile, struggling with falling survey response rates and also struggling to take account of the changing composition of the labour force. In any case, unemployment unexpectedly rose to 4.1%, just a tenth of 1% higher than we saw in January. While labour force participation, that fell to 62.4%, which is its lowest level since early 2023. I think perhaps the most concerning part of the jobs report was the underemployment rate, and that rose to 8% from a prior 7.5%. And for those who are unaware, underemployment is people who are, for example, working part-time or working reduced hours, but who want to work more. And you do tend to see unemployment rising when, for instance, businesses are looking to reduce hours in order to reduce costs. That's one of the reasons why we may see a rise in underemployment. Nevertheless, the jobs report was good for about 20 minutes in terms of a market reaction. We saw some modest dollar selling and we saw some modest gains in the equity complex as well, but they faded as the day progressed, and then we just kind of ended up grinding a little bit lower in the dollar, with the dollar index ending the day about 0.3% softer. And we also ended up just grinding steadily higher on Wall Street as we move towards the weekend, with the S&P 500 closing up by around about 0.5%. Nevertheless, that wasn't enough to stop the S&P from sliding to a third straight weekly decline, which is the worst run since last August. And it also wasn't enough to stop the Nasdaq from having declined over 10% from its record high. And for those of you out there who like labeling things, that is, of course, a correction. In terms of other bits and bobs from Friday, it was a day that ended in a Y. So, of course, we heard from President Trump. President Trump was talking about Canada. He was talking about reciprocal tariffs, and he was saying that they may put those in place today, which was, of course, Friday, and that didn't happen, or on Monday, or on Tuesday. Previously, of course, we were expecting those reciprocal tariffs to come into place on the 2nd of April. Just for those of you who are struggling to keep up, just to take the issue of tariffs on Canada in particular, Trump imposed them on Tuesday, then he tweaked them again on Wednesday, then he delayed and exempted a whole load of goods from them on Thursday, and then on Friday changed his mind again and said, oh no, maybe we'll have reciprocal tariffs as soon as Monday. So it's, that I know that's a slightly extreme example, but magnify that across all the countries that Trump is kind of targeting in this trade war. And you see why, firstly, it's impossible for market participants to be pricing risk. And secondly, why it's basically impossible for businesses to have any degree of confidence in the future path that policy and the economy by extension are going to take. Trump, though, did say on Friday that there hasn't been much by way of disturbance so far. God only knows what he's looking at to come out with nonsense like that. There were a few lines on geopolitics as well, without wishing to veer too far into Ryan's territory. Trump was saying that something, didn't say what, but something will happen very soon with Iran, which is reassuring. He was also talking about how if Ukraine don't want to settle for peace, then the US is going to be out of there, which is broadly a reiteration of what we've heard Trump say before. And speaking of Ukraine, there were reports on Friday afternoon via Bloomberg sources that Russian President Putin is apparently said to be ready to agree a truce in Ukraine, albeit with conditions attached. One of these conditions was said to be that Putin does not want NATO forces to be involved with peacekeeping in Ukraine and would rather a neutral nation such as China carries out that duty. If anyone seriously believes that China are going to be peacekeeping in Ukraine and Europe are going to sign up to that, then I have many, many bridges to sell you. In terms of other bits and bobs from Friday, we did hear from Fed Chair Powell. His speech was a bit of a nothing burger, to be completely honest with you, reiterating that the Fed don't need to hurry, they can wait for greater clarity, and that despite the lingering economic uncertainty, the economy remains in a good place. Of course, the Fed now in their pre-meeting blackout period ahead of the next decision on the 19th of March. That decision, incidentally, will also see the latest summary of economic projections and the dot plot updated as well. A few other bits and bobs from late Friday and over the weekend. Nasdaq, they are the latest exchange over in the US after the NYSE and the CBOE want to offer round-the-clock equity trading. They don't think this is going to start until the second half of 2026. There are quite a few issues around settlement that need to be ironed out on that front, but the direction of travel is clearly towards 24/5 equity trading at this moment in time. For the commodity focus guys out there, the US Energy Secretary, he has asked Congress for $20 billion to refill the SPR, the Strategic Petroleum Reserve, to its maximum capacity. That capacity is about 700 million barrels of crude. There are currently about 400 million barrels of crude in there. So I'll let you get your abacus out and work out how much they would need to purchase in order to fill that up. And two headlines from over the weekend. The first is South Korean news agencies reporting that North Korea Korea have fired some ballistic missiles. Kim Jong-un has been out of the news for a while, so clearly wants to get his name in lights once more. And last but by no means least, Mark Carney, my favourite person in the world,
Yay!
has won the race to become Canada's Prime Minister, which means we now have a president in the United States who says one thing in public and then goes and does a completely different thing. And north of the border, we have an unreliable boyfriend as the Prime Minister who also says one thing in public and then goes and does something completely different, which I'm sure is exactly what markets need in terms of stability. On a slightly more serious note, though, of course, bear in mind that Carney's election as leader of the Liberal Party is going to trigger a general election in Canada. That will probably take place in a couple of months' time. Probably the worst possible timing you could even try to envisage. Canada, of course, in the midst of a trade war with its closest neighbour. They now have, well, they did have a lame duck prime minister. They've now got a prime minister who's not even an MP, and very soon they're going to have an election, so effectively have no way of passing legislation whatsoever. So do bear that one in mind for any folk out there with exposure to the loony. But that is pretty much it from me for the moment.
Thank you very much, Mr. Michael Brown. Pardon me. So some few headlines from our dear friend Zach after the overnight news roundup that he puts out, and he's a master at copy and pasting. So first off, on Trump and the economy and tariffs in general, President Trump wouldn't rule out recession or higher inflation, suggesting that tariffs may rise further, and said there will be no carve-outs for automakers in April's reciprocal tariffs. Still, an aluminium tariffs, 25% on those ones, should be taking effect on Wednesday, but as Michael just said, give it 24 hours, we'll probably see a headline saying they're being delayed, but we'll give it time. The White House advisors Hassett hopes to resolve Canada's fentanyl dispute by month end. In terms of funding, House Republicans proposed a 7-month spending bill boosting deportations, veterans care, and defense, but slashing other programs. A vote could come on Tuesday, forcing Democrats to accept or risk a shutdown to the Washington, D.C. in general, I guess. TikTok sale. Trump is negotiating with 4 potential buyers for TikTok's U.S. operations, saying a deal could be close to closing quite soon, but again, pinch of salt needed. U.S. Congo Minerals. Washington explores a deal with Congo for access to critical minerals like cobalt. Obviously, that's battery, very, very solid battery metal there. Millennium losses. Hedge fund Millennium, apparently it's got 70 billion assets under management, reportedly lost
Tiny.
900 million. Tiny. Lost 900 million on 2 index rebalancing teams this year. Barclays, their rate strategists, have switched from long 2 years to long 5-year treasuries, noting 70 basis points of cuts priced in for 2025. China and Asia, what have we got over there? Beijing slapped 2.6 billion in tariffs on Canadian agricultural products, retailing for Ottawa's earlier levies implied against Canada. Japan's tariff plea. Tokyo Trade Minister heads to DC seeking exemptions on metals and auto import levies. And Japan's real wages fell in January. Bond yields hit multi-year highs amid weak 5-year auctions. My dear friend Michael has covered his best friend Carney. Germany and SPD forging a coalition priorities on migration and industry, apparently. We'll see how that one works out. UK to cut civil servants and boost AI to improve productivity. Norway's faster inflation complicates the rate cut timeline. And geopolitics, Ukraine and Russia. It says here Russia and North Korea have gained in the Kursk region, threatening Ukraine's leverage on the area. Zelensky aims to convince Trump to resume US aid by showing willingness for a quick peace talk. Or see, hopefully they get around the table. Musk on NATO. Elon Musk argued the US shouldn't fund Europe's defense, but said he won't shut off Starlink in Ukraine. US aims to speed arms shipments to Taiwan after China insists on peaceful reunification. Iran, Russia, and China, they're going to be conducting joint naval exercises. Apparently, they start in Iran's Chabahar port. Israel are set to resume talks with Hamas for the first time since Trump took office. In S&P 500 news, a bit of rebalancing here. So DoorDash, Williams Sonoma, TKO Group, and Expand Energy are joining the S&P 500, whereas Borg Warner, Teleflex, and Celanese are going to be exiting. I've never heard of any of those last three, but they are good for them. What have we got here? Oh, so TSMC and AI related news. TSMC's revenue jumped 39% between January and February, buoyed by Nvidia's demand. What else we got that's on note? That's about it, really. Yeah, that's it for me. Back to you in the studio.
Cool, good stuff. Thank you, Ryan. In terms of today and this week, then, I think this is going to be very quick indeed because there is a bit of a dearth of scheduled events going on this week. Certainly today, the data docket has absolutely nothing of any interest on it whatsoever. And the same can be said for the central bank speaking calendar, mercifully. In terms of the remainder of the week, really the main event risk in terms of economic data comes on Wednesday, and that is the February US CPI figures. Headline CPI, that's seen rising 2.9% on an annual basis, down from the 3% that we saw in Jan. Core CPI, that's seen rising by 3.2%, also modestly slower than the 3.3% that we saw in the month of January. Other than that, a few other bits and bobs to keep an eye on this week. The Bank of Canada, they will announce their latest policy decision also on Wednesday. The market pricing about a 4 in 5 chance that the BOC deliver a 25 basis point rate cut. Of course, the BOC grappling with a huge amount of trade uncertainty, softening data, and the fact that there's no government. So I wouldn't really want to be in their position right now. In terms of other bits and bobs this week, we also had the latest. Sorry, I've just seen what Zach wrote. Yeah. We also have the latest JOLTS job openings data from the States on Tuesday, and we get the PPI and jobless claims figures on Thursday, followed by UMich consumer sentiment on Friday. Also, quite a busy week of supply in the States this week. We've got a 3-year auction on Tuesday, a 10-year auction Wednesday, and a 30-year auction on Thursday. And then lastly, 2 other points worth bearing in mind. Friday, we get the January UK GDP data, which will probably point to the economy having hardly grown at all. And we also have the deadline for US government funding. It does look like they're going to pull their finger out and get that sorted, but do bear in mind, if we do go into a government shutdown, this is the non-farm payrolls survey week for March. So it could skew that data if that shutdown does indeed happen. And lastly, just on a bit of a housekeeping note, the US did move their clocks forward over the weekend, which means that the time difference between London and New York is 4 hours for the next 3 weeks until we move our clocks at the end of the month. And that has already caught me out twice, and it's only 8:45 in the morning. So don't be like Mike and just write it down. It's 4 hours, not 5 this week. And that's pretty much your lot from me for now.
Well, thank you very much, Mr. Michael Brown. Yeah, and Zach, unsurprisingly, has nailed that because.
Well, it didn't take a bloody genius, did it?
Oh, look, I was out with the New Sport boys. We went to the rugby. Okay, get off my back. But yeah, I'm not feeling very well this morning.
Go and have a lie
Michael
down.
Brown, I am. I'm going straight back to bed.
Dear me.
Mr. Michael Brown, thank you so much as always. Zach, I hate you. And the rest of you, we'll see you tomorrow. Take care.
Bye-bye.
Goodbye.